Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, from the benchmark index moves to sectoral indices, as well as all the stocks that have been buzzing from the trade today, and what should be your investment strategy as we approach the closing hour of the day as well. We'll also get you with the expert take on all of this and much more. But first up, a quick check on how the markets are doing at this point in time. A very volatile day for the markets so far after that sharp fall that we had witnessed yesterday, triggered by the Silicon Valley Bank crisis in US, and across the globe we've been seeing the markets have been jittery. Even in the Indian markets we've been seeing 17,000 is the level around which the Nifty has been hovering in the last 2 or 3 hours as well. 114 points down in trade, 0.7% of a cut. The Sensex has given up the 58,000 mark. It's trading at 57,890 currently, 350 points down for that one too. When we look at the other factors as well, the broader markets are down in trade. India VIX is slightly up as well at 16.2 levels. When you talk about the sectors, barring slight gains that are being seen on the pharma pack and the media pack, rest all of the sectors are actually in the red, with sharp cuts being seen on the PSU banks, on the realty pack, on the IT space as well. Those are the big laggards today in terms of the sectors. The market breadth also favoring the declines, with 40 stocks in the red of the Nifty50 stocks. In terms of the big losers, you do have the Adani Group stocks that have been under pressure since the morning trade. 7% cut for Adani Enterprises, Adani Ports down in trade too. Tech Mahindra, HCL Tech, M&M, the other laggards as far as the Nifty top losers are concerned. On the gaining front, you do have a far and few between stocks that are still holding up in trade as far as the Nifty stocks are concerned. BPCL, Tata Steel, Titan, Hindustan Bank and L&T. The other gainers at this point in time, 1.5% of a move is what we can spot. But time now to welcome our guest on the show. Mr. Ashu Madan joins in. He's the Managing Director at JM Financial. Welcome, Mr. Madan, and good afternoon to you. Thank you so much for taking the time out for this discussion. First up, the market reaction to the SVB crisis. This has become the talk of the town. Do you see an impact of this, prolonging for a longer period on Indian markets and especially the banking space?
Sakshi, see, nowadays, when you look at the overall markets in entirety, I mean, when something goes wrong somewhere, then we try, I mean, as a bullish sentiment or probably wishful and a conditioned mind that no, all is well here, so there's nothing bad. I mean, it's over there. But when something goes right, then we want to get connected. So I mean, you have to have the both sides in the stride. So coming back to the specific event, see, the problem is that the fear of skeletons coming out. I mean, this is whenever there has been this kind of a situation in the market. But the important is it a one-off case, or there could be skeletons coming out in the market? So that fear will keep our market in check. And also nowadays, Sakshi, the globe is connected, the competition is fierce, the technology will play havoc. So if you say that you are we are all connected, so what can happen somewhere? I mean, you can't rule out. So if somebody says that it is out of syllabus, no, it is not out of syllabus. You have to change the syllabus in the changing world. You have to adapt. You have to align with what is happening in the market. So I think not surprising. And every time you think that probably this time this would be the last time, and every time the checks and balances are much more, something else will happen. So you have to live with it.
Absolutely, we have to live with it. But I wanted to just get a sense on the kind of, sell-off that we've seen already. About 2,500 points gone on the Sensex in the last few trading sessions as well. About 8 lakh crore rupees is a kind of wealth erosion that the investors have seen because of these fresh concerns that have emerged in the world as well. How long can this sell-off continue, and for how much can the sell-off continue? What are the levels that you're looking at in the markets?
So coming back to your point, if Sakshi, it has been happening since almost a year. See, it's been almost a year. The returns of stocks are not coming at all. I mean, all the popular stocks are in the range and probably grinding down slowly and lower and lower. So important point is that post that, I mean, we were in a grinding market. We were not getting returns. And then in that kind of a market, first we were hit by Adani news, and there's this kind of a global news. So I think this can last long. There would be alternate bouts of some recovery, some bounce back. But are we out of woods? probably there would not be a V-shaped recovery. There could be a V-shaped recovery for a very small period of time or for some points, but I think we have to live with a U-shaped recovery, and U can be a little longer. I mean,
Yeah.
see, it all started from many months back, and there would be probably 2023 could be another grinding year. Who
Yeah.
knows? So we should not rush to buy stocks, irrespective of that fall, and probably you find that the levels are lucrative, and the levels you will find only lucrative because in the recent past we have seen those stocks at a higher level. That's the only reason of finding them lucrative.
Right. So, sir, would you call it a buy on dips market or is it a sell on rally market?
As of now, Sakshi, continuously for many months, I've been saying it is a sell on rise market. This market will frustrate you if you're holding on to the portfolio. It will frustrate
Sure.
you. But yes, the derivative market is some space where opportunities are there. I'm very great fan of derivatives market, and particularly index trading through options. So I think
Sure.
whether that is the place where opportunity is. And the best thing about Sakshi that Nifty is at 15,000 or 20,000 or 25,000 or 12,000. The weekly option, the monthly option gives you gives you an opportunity to play through different strategies. I think that's why
Correct.
you have seen, all the reports coming on that how cash markets are depleting in the market. There's a lack of interest in the cash market vis-a-vis the derivatives market is increasing, and there is a logical reason. There's a rational. There is a practical reason why it is happening.
That's true. Also wanted to understand, in case one has to really spot opportunities in this current market, which would be the sectors that you would look at where you would be bullish for the next 1 or 2 years perhaps?
2 years is a very long period, Sakshi. I don't fall into that bracket. I mean, probably we are interacting for the first time. I am not a great fan of long term. Long term is non-accountable, and nobody can hold me responsible. For me, it is important to take step by step. This is not a test match. Now we are into a 2020 kind of a situation, and for me, next 1 month, 2 months, 3 months, calling the market is more important. As I
Sure.
said, since last many months, there has been no interest in stocks, and today also there could be recovery, but will there be a meaningful recovery in most of the stocks or the popular stocks? The answer is no. The market is range. The problem with this kind of a market is the longer it stays like this, some point in time, out of frustration, out of irritation, out of loss, or out of fear syndrome, you tend to square off your position, which will be at the fag end. So that is why I always say that either one should be very alert and play with the stop losses, but then normally investors don't have the stop losses because the kind of conditioning which is there in the mind long term. But I don't think so long term exists. As I said, that the definition of Sakshi long term will change now. Gone are the days. It used to be 20 years back, 10 years back, 5 years back. Now,
Yeah.
when the current generation is a swipe generation. If we are not on social media for 1 hour, we
Sure.
get jittery. If I'm not shopping on a site for 2 days, I get jittery. If I don't party for 7 days, 10 days, we get jittery. So don't you think in this kind of a situation, long-term definition will still persist with the 10 years or 15 years? The answer is no. So 2 years, 3 years is also a long period, actually. Once
Absolutely.
the market reverse, there will be many sectors to perform. I don't want to pick point or choose that this will be an outperformance. There has not been any outperformance, actually. On the contrary, if you look at the entire last year and 6 months, every sector which has performed for some time has performed for trapping the people. That the sectoral rotation was pharma was moving, everybody went into the
Yes.
pharma got trapped.
Yes.
Then there was
Yeah.
metals people got trapped. Then IT people got trapped. Then finally banking is the only place which is the blue-eyed, because there were the results are good. Now even in banking, the people got trapped. So where are the sectors? These sectors churn is happening more in terms of trapping people than instead of any genuine outperformance which should last long. So right now I think it is too early. Maybe we'll interact intermittently. So we'll
Sure.
be in touch, and I'll share with you when we actually have that kind of a view.
Absolutely. Very interesting data points that you've shared with us, and the kind of insight. It's a different insight that you have shared with all our viewers as well. But there's some slight disappointment in the network that we have, and we're not able to get a very clear picture quality of yours. We'll try and fix that before we get back to the conversation as well. So far, if we speak, the markets are still hovering lower, about 345 points lower. Sensex is trading at 57,899 currently. Looking at the Nifty as as well. It's hovering 113 points lower at 17,040. But clearly, Mr. Madan really pointing out that the markets could be jittery. It is a sell on rise kind of a rally, and one should be looking at some weekly options as a better option at this point in time to garner more profits at this point in time, because sectorally he does believe that a lot of churn has been happening, and that's where investors have been in fact getting trapped, is what his point of view is. However, one really needs to figure out whether more skeletons will come out of the SVB crisis, and it is a wait and watch situation till the time we can really figure out how the markets will be carrying on forward. But one after the other, markets have been looking at constantly the problems really creeping in, and fresh worries really emerging for the markets and for the investors, just like the current one is as well. We'll leave it at that, but do stay tuned on to Business Today TV to catch all the updates on the markets and news from the world of business as well. Until then, many thanks for joining in.
Indian Army braves at Galwan push back against an expansionist China at the line of actual control. Images that galvanized an entire nation to stand up to Chinese bullying at the line of actual control.